For nanny tax, the first question is simple. Is the worker your household employee or self-employed? The test is control. If you control what work is done and how it's done, that's an employee. It doesn't matter if they're part-time, paid hourly, or hired through an agency. On the EA exam, they love disguising control facts in the story. Here are common household employees: nannies, housekeepers, private nurses, yard workers, and chauffeurs. But a worker can be in your household world and still be self-employed. Classic example: a daycare provider who watches multiple families' kids in their own home. You don't control their methods, and you're just one customer. That's not a household employee. Next, the threshold. If you pay a household employee cash wages of $2,700 or more in 2024, you normally owe Social Security and Medicare taxes. Cash wages includes checks and money orders, not just literal cash. The combined employee plus employer FICA is 15.3%. Exam tip: when they give wages above the threshold, assume FICA applies unless an exception is stated. How do you report it? You use Schedule H, household employment taxes, and you file it with the employer's Form 1040. To file Schedule H, you need an EIN, an employer identification number, because you're acting as an employer. Also, you must prepare a Form W-2 for the household employee and give them a copy. That W-2 requirement is a favorite EA exam detail. Income tax withholding is different. You're not required to withhold federal income tax from a household employee's wages, but you can withhold if the employee asks and you both agree. Even when FICA doesn't apply, the worker's pay can still be taxable income to them. So don't confuse no FICA with not taxable. Those are totally different questions. Now the family exceptions, because the IRS loves making this weird. Wages you pay to your spouse, your parent, or your child under age 21 are exempt from the nanny tax rules, meaning no Social Security and Medicare taxes, and no FUTA under these rules. But the family member still generally reports the income on their own return. On the exam, watch for hired my mom facts. Quick example: Randall hires Hilda to care for his infant twins in his home, Monday through Friday, and she also cleans during the day. That's household employee control. He pays $33,000, so he files Schedule H with his Form 1040, gets an EIN, and issues Hilda a W-2. If you see a set schedule in the employer's home, that usually screams employee. Derek hires a full-time nanny to work in his home and care for his 2 toddlers. He pays the nanny $23,000 during the year, which option is a way for Derek to avoid an estimated tax penalty for taxes reported on Schedule H. The choices include making estimated payments, issuing a 1099 instead, paying everything on April 15th, or saying no additional taxes due. Think about it. The correct answer is making estimated tax payments using Form 1040 ES. Schedule H taxes increase what Derek owes, and paying during the year can prevent an underpayment penalty. The tempting wrong choice is paying it all on April 15th. Yes, you can pay then, but that doesn't automatically protect you from an estimated tax penalty if you underpaid during the year. Ethan is a full-time life insurance salesman. His employer gives him a Form W-2, but Ethan reports the wages and his allowable expenses on Schedule C. He does not pay self-employment tax and does not file Schedule SE. For federal tax purposes, what is Ethan? An independent contractor, a statutory non-employee, a statutory employee, or a common law employee? Think about it. The correct answer is statutory employee. Certain workers, including full-time life insurance salespeople, can receive a W-2 but still report the income and expenses on Schedule C, and they do not treat it as self-employment income for Schedule SE. A tempting wrong answer is common law employee because of the W-2, but the Schedule C treatment points to statutory employee status.